We have Caleb Slade on the phone from Salt Lending, and I'm excited about having them on. We met them, I don't know, I see in their profile it says, we're back to the dog years. We met probably 6 months ago, and it seems like it's been an eternity. So it'll be great to catch up with the Salt Lending guys. Caleb, are you on the phone? On the
I
line?
am. Thank you guys so much for having me. It's a pleasure to be here.
Hi,
Great.
Caleb. Welcome on.
Thank
Yeah,
you.
so it's been a while since we spoke. So catch us
Yeah.
up on what you guys are doing. And for our viewers that aren't familiar, give us a little bit of a background to what you guys do as well.
Yeah, absolutely. So Salt Lending is we're based in Colorado, U.S. company. What we're doing is providing members with cash loans using their cryptocurrencies and other blockchain assets as collateral to secure those loans. So instead of only having the ability to pretty much sell your Bitcoin, Ethereum, and other assets, triggering unfavorable tax events, then losing out on that future appreciation. We let you put it up as collateral and borrow against it, and then when you repay that loan and the interest, then you get your collateral back. It's almost identical. It's a very traditional lending model. And it's just very similar to like securities-backed lending, or like borrowing against your home equity or your car or something like that. We're just applying this traditional lending model to a non-traditional asset class.
So how do you manage the volatility, with this? So like today, Bitcoin, I think we're around 9,400 or so. So I've got my, $100,000 in Bitcoin here, and I want to take a loan out against it.
Yeah. So that's a great question. So that's really what sets Salt apart, and it's kind of our secret sauce, is how we address the risk of volatility. Because otherwise, everyone would already be lending against crypto assets. If it was easy, everyone would do it. So the way that we address that is that loans start over collateralized. So between 20 and 60% loan to value ratios is the range we've been starting with. So that over collateralization protects a lot against that volatility initially. But there's still been cases, and like when we first started launching loans earlier this year, where there was a pretty big downturn in the market, and what happens when the value of that collateral starts to push up against those loan-to-value thresholds is we issue the borrower a margin call, and they can do one of three things. They can either make an extra cash payment to recalibrate the loan-to-value ratio, they can put in more collateral to recalibrate it, or they can do nothing, and we will liquidate just enough of that collateral to recalibrate that loan-to-value ratio. Almost identical to what would happen if you were borrowing against like your stock portfolio. It's just a margin call that we issue to the borrower, and we communicate through every channel that we have, because most borrowers, in the face of that margin call, a vast majority of them just elect to put in more collateral.
Right. Oh, that's very interesting.
Oh.
So what you're saying is, if I have $100,000 in Bitcoin, I can come to you and you'll loan me up to 20 to 40. Thousand?
Up to $60,000.
Okay.
In that range. It's a little bit. I might be a little bit off because it's not like a. Yeah, I think it's up to about $60,000.
What kind of interest rates are you guys charging?
It depends on the loan to value ratio, because from a lender's perspective, the higher the loan to value ratio, the higher the risk profile of that loan. So it's been between I believe like 10 to 18, or a little bit above 20% on the more high risk, higher volatility loans, yeah, and that's just a straight annual interest rate, like APR.
So Caleb, I know, we're also obviously in the blockchain crypto industry, and you have your skeptics and people that definitely have their viewpoints. So how do you feel like the community's embracing you, and kind of what have been some of the real wins in that scenario and some of the challenges that you've faced?
Yeah, actually it's the community engagement. It was actually something that I put a lot of my focus on within the company. I'm a co-founder, but I've shifted my role over to chief knowledge officer. But when we initially started, I was the community manager, essentially, or director of community. And when we started, we were very reticent and careful and conservative about any advertising. So we really did rely almost entirely on word of mouth and engagement with the community through social media channels and Slack and Telegram, et cetera. And initially, I think there was some challenge that we faced because we've always taken a very, very conservative and compliance-oriented approach to what we say about our company and what we say about our product and what we say about the future. We want to be very careful to underpromise and overdeliver, and also to make sure that all of our language is fully within the guidelines of compliance and regulatory frameworks. Now, what the challenge of that is that the crypto community tends to be kind of the zeitgeist of the crypto community is very opposed to censorship, and there's kind of this, especially last year, there's this kind of rebel yell attitude about regulatory compliance. And given the industry that Salt is in and the role that our company is filling, that just wasn't an option, right? We couldn't just shirk the compliance guidelines and let it be completely free conversation. So we were actually, criticized somewhat heavily for being so almost prudish about the language and, making sure that people weren't getting the wrong impression through what other people were saying in our channels, and doing our best to really kind of curate and maintain a really healthy dialogue, but also within those guidelines. And initially, I think we were largely unique in the space, in the crypto space, but so we got that resistance. And I think over time, we started seeing more and more companies following those kind of that same playbook, almost verbatim what we were enforcing in our channels. And then I think that the community started to realize that in order for crypto to really to have a place and a legitimate role in the global economy, that these things have to be considered, and that there has to be some maturity in the way that we talk about things, and how we sell these products and how we maintain that dialogue. So I think that over time we saw that there was a much greater acceptance for that mentality.
Yeah,
the has been absolutely incredible.
The regulatory framework in our market is really what will help this become mainstream and help cryptocurrency and blockchain technologies really get adopted. So I'm a firm believer in that, and we have to find ways, and we're still all kind of waiting for that framework to come out so that we understand what the ground rules are and how we need to participate in the market. But I think we're all trying to do the best that we can until that framework starts coming through. So how much lending have you done so far, and what kind of assets do you have that back yourself?
I believe we are in the ballpark of having lent, I think there's been about $40 million in loans so far.
Oh, that's pretty good.
I don't want to give an exact number and misrepresent that, but it's in that range,
right?
Close to that. We started issuing loans proper and really in earnest on December 28th of last year. So it's been a couple months. We're really happy with the progress and thus far, and the overwhelming demand that we've had. We're really excited, and we're really dedicated to being prudent in our growth. I think that, and the way that we engage with our technology that we're building and built, and making sure that it's functioning really well, so that our customers are taken care of and everything is secure and safe. But we're really happy with our progress so far.
Yeah, no, that is absolutely great progress for that time frame, and I think there's definitely a need, for what you're doing in the market. Real quick, what type of interest rate do I get on these loans?
So it's been between, again, like I was saying, it's based on the loan to value ratio that the borrower elects to take. But it's been between, I believe, 10 and low 20% annual interest rate. Okay.
Oh, very good. Well, so now to find more information about Salt Lending, you go to www.saltlending.com. Is that correct? Awesome.
Yeah.
Well, it's absolutely been a pleasure, speaking to you, and I, look forward to seeing you guys at the next conference. And I think you're doing a great service here in this industry. We definitely have a great need for you guys being in here.
That's awesome. We'll be at, if anybody is going to Consensus in New York in May,
yes,
we'll be there. We'll have a great presence there, and we'd love to talk to you. Come by our booth and say hello.
We will. You've been listening to CEO Money, sponsored by Rewards.com and RewardsToken.io. We'll be right back.